Hello, everyone. Welcome to the June 16th, 2021 edition of the Follow Through, where I go through stock charts very quickly that I posted in a previous blog post. This one covers charts from the Above the 40 post from last Friday, June 13th, June 11th, sorry. This is the S&P 500. Today was a Fed day, so there was a lot of action. You can see that the S&P 500 did not like what the Fed had to say for today. Check back in tomorrow and Friday, as initial moves often get reversed before the market truly reveals itself. But this is very interesting because the technical traders and the robots were very active in buying right at that picture perfect touch at the 20-day moving average. So let's see if that support continues to hold. Next up is the NASDAQ. The NASDAQ came close to challenging this double top here. This is the first top, which is February, and the last one, which was in late April. And you can see here the NASDAQ looked ready to burst right through, but the Fed reaction had other plans. Now the NASDAQ lost less than the S&P 500. Buyers really took the index right back up here from the low, didn't even get to the 20 or the 50-day moving average. And on the net, the NASDAQ only lost 0.2%. So I'm looking for essentially a push on this one and perhaps just some more churn up ahead. For the small caps, IWM, similar result as the NASDAQ. Sellers tried to take this one down and buyers took it right back up. Didn't quite touch the 20-day moving average, but got close. I still have a position that's on life support here. The long is expiring on Friday. The strike price is 235, so I'm going to need some serious kind of bounce or rally to get back on that one. Meantime, the VIX was interesting in that it popped and increased 6.6%. It pulled back from the highs as it often does, but this 3 days of strength for the VIX means that it's defending these recent lows, which was around 15. So as I've mentioned in previous videos, I can't quite get bullish on the market as long as the VIX is going to hold some prior low. Really need this to break down for me to be convinced there's enough complacency to get bullish on the volatility signal. Let me go back to financials because that one also got very interesting. You can see it's been dribbling down for much of June. Today was the test of the 50-day moving average. We'll see if that continues to hold. It looks like a nice setup, but there are some financials that I don't quite like. I'm going to take a quick detour. These aren't charts that I posted in the last blog post, but I noticed, for instance, Citigroup plunged today, confirmed a 50-day moving average breakdown with the second close below that average line, lost 3.2% today. JP Morgan, which is of course a very major financial, this is on the edge. You can sort of call this a confirmation of the 50-day moving average breakdown, but given it managed a gain and relative strength today at 0.7% gain, it's actually looking like it's already in recovery mode. Of course, all eyes on the bond market with it being a Fed day. The TLT was all over the place. It's hard to even get a read as to what the market's thinking in terms of future prospects for Fed rate hikes. The Fed today essentially said that it's now thinking about how to back off from easy money policies, but we're still a long road on that, and the bond market is saying, shrug his shoulders, don't quite know what to make of it. All right, let's get back to some more of the charts from last blog post. Caterpillar continues to slide. The intraday low from Monday is still holding, but today was a loss, 1.1%. The tides have definitely turned on Caterpillar. I thought that these two candles here, given the long tails, were carving out a bottom. So as a hedge, I actually added some call options, even though I'm supposed to be bearish, but it looks like bearish is actually the way to go. So I'll have to flip all over again if that low breaks. Let's move on to Deere & Company, which for a while was looking as much in trouble as Caterpillar. It's holding this Monday intraday low, so it's hovering. I don't know quite to make of it, but I have a put spread on that one. I believe it's a 330, 310 expiring in July. So I'm just sitting on that, waiting to see what develops. Koopa Software, which is the procurement SaaS company, I got into this one given the bounce, right? Well, here's earnings. Here's the earnings gap down. Here's the place where Koopa recovered all of its post-earnings losses. I bought in somewhere around here, thinking that the 20-day moving average would hold. Today, yesterday it sort of slipped, and today it slipped more. It's looking like there's going to be some more churning action, which means I'll probably be happy to take small profits on a tested 50-day moving average resistance. Sally Beauty Holdings. Not much to say here. Nothing's really going on, and I'm not moved to do anything, whether to short or long, but just know that it's continuing to churn. Red Robin Gourmet Burgers. Again, this one has not really made any progress from the last time. Well, it's made a little bit of downward progress, but I don't see a reason to act on this chart at all. We have Brinker International. This one is really swinging wildly. It continued to sell off. It broke through the 200-day moving average. It popped back up above the 200-day moving average. 2.7% gain today. This stock still looks in trouble, but it's hard to make a real move until either that 200-day moving average breakdown confirms or it gets back above here, the 50-day moving average. All right, Vulcan Materials, which acquired my favorite materials company, U.S. Concrete. As I was warning in my last post, the material space just does not look good. And sure enough, Vulcan continues to sell. I don't see any reason to buy it here. It looks like buyers have a ways to go to bother to step in. Now let's go into the housing trades. These are also still looking like they're in trouble. For a little while there, you can see this this wick up here shows that buyers are actually thinking that the Fed move was positive. I don't have the intraday here, so I can't say whether this was pre or post Fed. But the final conclusion on the day was a 1.9% loss for LGI Homes, and it looks like it's on the brink of follow-through selling. You can see down here that the selling volume has been extremely heavy all month long. This is characteristic of a stock that is topping out, and big money is trying to get out of here. Hovnanian Enterprises. This one, of course, is being contrary, and it's been up the last 2 days, but I still don't like it. See my post for more details on the extremely poor fundamentals that this company has. Again, I don't see a trade here. I just like to look at this as a measure of the speculative fervor that may be in the housing marketplace. Next, we have Meritage Homes, which is my last play on the seasonal trade for home builders. And this one, as I mentioned in the blog post, I'm just keeping a small number of shares in case I end up being wrong about the seasonal trade being over. I think it's over. Meritage today lost another 2.1%. It's broken its 200-day moving average. At best, it's probably going to churn from here. Next natural support is around here at the $92 level, but we will see. But again, I have just a small number of shares. I'm fine just sitting in this one and waiting out what happens. Redfin continues to confound me. I would have thought it'd go down even lower given the trouble I'm seeing in the housing market. It did go down 1.6% today, but it's holding that now upswinging to 20-day moving average. I do have a put spread on this. Again, just waiting to see what happens, but this is pretty bearish. It failed right here at this converging 200-day and 50-day moving average. Next up, we have Stanley Black & Decker. Oh my goodness, 2.7% loss. One more retail confirmation this is one more confirmation in the retail space that housing plays are done. You can see here sort of a double top action last month. I think this is June 1st. Yeah, so last month to June 1st, and the sellers have just not stopped. The 20-day moving average is now moving down. Soon, the 50-day moving average will flatten out and then start to bias downwards. This one looks like it has a clear shot to test this 200-day moving average. And as the law of physics sometimes works out, this breakout probably is going to have to completely reverse before this selling action stops. If indeed that's what's going on, is a mass exit of housing-related plays. Whirlpool, surprisingly, as you know, I took profits on my put option last week. it also continues to sell down. It also is confirming the end of the housing related plays. It dropped another 2.8%. It looks also clear to test the 200-day moving average at some point. Next up, we have Google. Google's just sort of hanging out, chilling out. It's leading the big cap techs right now, pretty much. And I don't know, not much to say. If it breaks out for yet another high, you move in and do some long trades, but don't expect too much on the upside. I'm hoping for a dip at least back to the 20-day moving average before I dare to buy anything here. And finally, Wendys. This one finally looks like it wants to stabilize a little bit around the 20-day moving average. Hard to say. I would guess that it's going to eventually close this gap down, as the law of trading physics dictates that this gap must eventually close on something that was so crazy and so speculative. As a bonus, I want to end off with Apple, just because its trading action also was very bullish for big cap tech. On Monday, it burst out for a 2.5% gain. I moved in with a calendar call spread the next day to take advantage of a very small dip. Apple dipped back below its 50-day move average day, but then bounced right back up, sort of like trying to push a beach ball underwater. So that position is looking pretty good, and I'm hoping I can take profits Friday or Monday on that one. So once again, everyone, thanks for checking in. This is still a work in progress, looking for feedback, anything that you want to see changed, any comments, any critiques, all welcome. Thanks for tuning in, and see you the next time.